Hello, I'm Quiva Birmingham from bonkers.ie, and today I'm going to chat with David Brady, Director of Spry Finance, Ireland's only lifetime loan provider, to ask him the questions you want to know about this tax-free lump sum. I'm also going to get him to address some common myths surrounding this form of equity release. So first things first, David, welcome to the show.
Thank you very much for having us. Thank you.
Let's ask the most important question. What is a lifetime loan?
Well, a lifetime loan is a mortgage. And like any other mortgage, it's secured on the customer's home. It's designed to allow customers to access equity in their home in a manner that doesn't mean they don't have to sell the home. They can get access to a tax-free lump sum drawn down, and they can use those funds for whatever variety of purposes they wish, and they can borrow an amount based on their age and the value of the home.
And who is eligible for a lifetime loan?
Well, for our customers, it is any customer aged 60 or over. They must be resident in the Republic of Ireland. The home must be their primary residence. 175 million minimum value for homes around the country and 250,000 in Dublin.
And if it is a joint application and if someone is under the age of 60, can they still apply, or do both people have to be over 60?
The youngest has to be 60. So for a married couple, if somebody is a little bit younger, we go by the youngest age, and that person must be 60.
Taking out a lifetime loan is a big financial decision for you and your loved ones, and it can be a little daunting to make, especially when there are a lot of misconceptions and rumours floating around. So it's about time we put all these rumours to rest and make sure that you're getting the correct information about lifetime loans. So, Dave, are you ready for our lifetime loan edition of Fact or Fiction?
I'm ready.
Okay, let's jump right in. So, a lifetime loan and a mortgage are the same thing. Fact or fiction?
It's a little bit of fiction. A lifetime loan is a mortgage, and it's a mortgage that is secured on the person's property. That's the same. However, we do have some unique features that are different than a traditional mortgage. So, for example, all lifetime loans underwritten by Spry Finance will have a fixed interest rate for life. You must be a minimum of 60 years old. They have optional repayments, but they are optional, so customers do not have to make repayments if they do not wish to. They have a no negative equity guarantee, so you will never own more than your home. There is no term limits. There's no age limit in terms of an upper end. So again, it gives people real flexibility about how they manage the loan over a period of time.
The money I receive from a lifetime loan is free money.
It's certainly not free.
Damn.
No, like all loans, whether it's a loan from a bank or the post office or the credit union, all loans will get charged interest. A lifetime loan is no different. So customers will borrow an amount of money based on their age and the value of their home. And they will be repaid that with interest on top of it. So it's not free. Our interest rates are fixed. So they're fixed for life. So people have real certainty over the cost of that loan over time. And should they wish to manage that balance over time, they can use the optional payment method. So they can service up to 10% of that loan per year to be able to manage the balance.
Yeah, I think a lot of people get confused with that because, as you said, the difference with this type of mortgage is that you do not have to pay it when you're alive.
Yeah, it's one of the unique features because, we see people coming to us obviously over 60. Our typical customer would be age 70. They've generally retired, they have reduced incomes, and being able to leverage and use the equity they have in their home at a time in their life when they want to kind of manage outgoing costs. They want to use that equity. Some people will service it, as I said, in terms of manage the payments, but where they want to stop or take a break from payments, they don't have to do that. And ultimately, you can get paid from their estate or when they go into full-time care and the property is sold.
So next question, leading on from that, fact or fiction? If I take out a lifetime loan, I no longer own my home. Because I think a lot of people be worried about this one.
Yeah, that's fiction. You 100% own your home. Again, it is just a mortgage on their property. The customers 100% own the property, and it is just a mortgage. So they are responsible for paying the local property tax, unfortunately, maintaining it, etc. And they benefit from any increase in value in the home. At any stage, the customers can pay it off again, like a normal mortgage. And should they choose to do so, trade down, etc., they can pay off the balance. So no, it is their home. You own it 100%. It is just a mortgage against it.
Getting a lifetime loan will put my family in debt.
No, that's fiction as well. So again, a feature of our loans at Spry Finance is that we have a no negative equity guarantee. So what that means is that the loan will never be more than the value of the home. The loans are also non-recourse, which means even if there's other assets or money in the estate, etc., the loans cannot be attached to that in the estate or passed on to your family. So they are non-recourse in that regard. So you will not be putting anybody in debt.
Okay, great. And it can be paid back when the home is sold.
Correct, yes.
The money I receive from a lifetime loan can only be used on certain expenses.
No, that's fiction. So all of our customers can choose to do whatever they want with the money that is theirs. The most common things that customers tend to use it for, and what they tell us around is some home improvements. They will use it to support a pension. Living inheritance, again, is a big one we see this year as a trend. Refinancing other existing mortgages. But customers can do it for whatever they want. And we'd often have customers who will be doing a once-in-a-lifetime trip to Australia or America to see the grandkids that they wouldn't normally be able to do. And some of that funds could be helped to do that. But it's anything that they wish to do to spend the money on. It's their money.
So there's a lot of freedom in what they can do. They can go on holidays, and I think people need to know that. It can be used in a great, fun way, It doesn't have to be...
Absolutely. Like the reality is people are living for longer and now retiring at the same time. We're living longer. We've got the longest life expectancy in Europe. And people don't need to compromise. And people have built up some wealth in their home. They might have reduced income now because they're retired. They mightn't have had the pension they may have wished for. But why should they compromise? Why should they not experience things when they have the ability to do it, really?
Yeah, so it gives you a high standard of living.
Yeah, so it's about giving people choice and options around that. And people can borrow from us, past the age of 70, manage the balance over time for a variety of reasons. And some of those are holidays, some of them are retrofitting, some of them are living inheritance, whatever it might be.
Taking out a lifetime loan means my family will lose their inheritance. Fact or fiction?
No, that's fiction. So we certainly encourage all of our customers to talk to their family. It's a big decision. So we would always encourage our customers to talk to their family. We'd encourage them to take independent financial advice like the guys here at bonkers.ie. And we will insist on legal advice as part of the customer entering in a loan agreement. But as part of that discussion with the family, they have discussion in terms of what their needs are, what they're looking to do going forward, and in a kind of open and honest way with the family. And then they can see how much they're going to borrow, what's it going to be, what's the cost over time going to be, what's likely going to be repaid, and they have that discussion with the family.
And I think that's really important as well, because when you recommend or tell people to get legal advice, that's not from you guys, that's separate.
Oh no, 100%. It's independent legal advice. So it's, we will have our legal team in terms of doing the loan agreement, and the customer will have their own independent legal advice. It's always independent. And again, it's really useful again when they have independent financial advice as well, because it's not just the contract piece in terms of the ins and outs of the contract, but there might be a different avenue the customer may want to go down depending on what they're looking to achieve. And it's always good to get independent financial advice as well.
When I pass away, anyone living in my home has to move out. Fact or fiction?
That's fiction. They don't have to move out if there's somebody there with you at the home. I suppose when somebody does pass away, the loan becomes repayable. We give 12 months for that to happen, in terms of, obviously there's a significant life event that's happened there. So we give a whole year to be able to manage that process with the family. And ultimately the loan has to be repaid, but the house doesn't actually have to be sold. So in many cases we'd have customers or their families would say, well, actually we wouldn't mind holding on to the house, and therefore they'd settle the mortgage at that point from the estate, but they would hold on to the property.
And if it is a joint lifetime loan application and only one person passes away, does the loan become repayable then?
No, it's always from the death of the second person, or the second person moves into long-term permanent care as well. So again, it's designed for that purpose. So we would often see that in terms of there's been an event where somebody has gone into care. It doesn't become repayable at that point. The customers still get to enjoy the home and have the security of full tenure for life in that property. So that's not true.
The amount of money I can release from my home depends on how old I am. Fact or fiction?
Well, that's true. So it depends on your age and the value of your home. So we start at 15% age 60, based on the value of your home, and it moves up 1% additional percent for every year of age, up to a maximum of 40% for those 85 years and older. So you can borrow more if you're older, so that is true.
But you don't have to borrow that full amount.
No, that's the maximum allowable amount. And what we see is interesting actually is that of all the customers that come to us, typically customers take about 80% of what they qualify for. Okay. So for an average loan size with ourselves, maybe about €100,000, typically the customer will take 80%. We very much, as part of the process, we'll make sure that people are taking, what they need, what's suitable, and we help manage people through that process. So people take what they need, and it's generally less than the maximum.
So, fact or fiction, I can't pay back my loan repayments during the term of my lifetime loan.
Yeah, that's false. So we have an optional payments, which is a feature of all the loans. So customers can pay up to 10% of the original drawn down amount per year. So you could pay it back over time and actually reduce the balance down. Similarly, if they are just a mortgage, so if a customer decides to trade down the property, settle the loan at that point in time, they can do that as well. There's no issue. And again, that would be quite common. A lot of customers, aged maybe 60, 62, early 60s, might take out a lifetime loan for a period of maybe 10 years, and at 70 decide to trade down. And again, that's what it's designed for. The features are to allow that. So no, we'd have customers who would settle it throughout that period and make payments throughout the lifetime loan. No issue at all.
And are there any fees that customers will face if they decide to pay back their loan before the 10 years?
Potentially there is. So it is a fixed product and it's a fixed term product. So like all fixed term products, there is potentially an early repayment charge. I do say potentially because we've put in place a lot of mitigants around doing that to make sure that we don't charge it if we can avoid it. So for example, if a customer gets to the age of 88, there's no early repayment charge. If the customer has the loan 10 years, there's no early repayment charge. If the customer just tries to sell the home and actually trade down, there's no early repayment charge. Also in the rate environment of what we benchmark it off, if the rates are the same or higher, there's no early repayment charge. So we've tried to mitigate as many opportunities as possible for there to charge. But it could technically happen, but I think to date, we've over 3,000 customers, we've yet to charge an early repayment charge. So it kind of gives you an indication in terms of how we manage it.
Taking out a lifetime loan affects my ability to sell my home. Fact or fiction?
No, that's fiction. So again, the customer 100% owns their own home and they can decide to do what they want with it. Now, we do have a first ranking charge as a mortgage provider, like all the other mortgage providers, but essentially that will just be settled when the property is sold, and will be settled through the normal conveyancing process with the solicitor. So no, customer can trade in at any time, decide to sell, move property, no issue.
And then can they just repay their lifetime loan then, or can they move it to the new property?
You can't port it to the new property, and again, some customers look to do that, but again, we have to make sure that the new property qualifies. So again, by value and by age and where it is, but again, there's absolutely opportunity to do that.
Actually, this is a big one I think a lot of people are going to be concerned about. Taking out a lifetime loan makes me ineligible for nursing home schemes like the Fair Deal scheme. Yeah,
that's not true. So they are 100% compatible. So again, we are a mortgage provider, so we have a first ranking charge on the property. The HSE will come along, and if somebody wants to avail of that feature with the HSE to get, say, the Fair Deal scheme, the Fair Deal will look for a charge on the property, and they take a second ranking charge. So Spry Finance, as a matter of course, will allow that no matter what. And we have many customers who would have both. So 100% compatible with both.
And following on from that, the last fact or fiction we have, getting a lifetime loan will impact my pension entitlement.
No, that's not true. So again, your lifetime loan is based on you accessing value you have in your home. It's nothing to do with your pension. Some people use it to help support a pension, but it has no impact on your pension at all. It is your own home. It's the wealth you've created in your home, and that's what you're accessing.
Brilliant. Well, that brings us to the end of our fact or fiction lifetime loan edition questions. So thank you, Dave. If you have any questions or queries about taking out a lifetime loan, reach out to bonkers.ie today. You can also find all the information that we've covered here today and more in our Lifetime Loan Quick Start Guide series, which covers the different considerations, terms and questions most commonly asked by applicants. I want to give a final thank you to the Director of Spry Finance, Dave Brady, for sharing his best tips and advice about lifetime loans with us today. So thank you.
Thank you very much. Thanks for having us.